A OK manufacturer filed a UK manufacturer filed a $2 million ransomware claim. Their insurer denied it. Not because the attack wasn't real. Not because the policy had expired. The reason was buried in Clause 14.3, a clause that exists in almost every cyber insurance contract written today. And almost no one reads it before they need it. In 2024, cyber insurers paid out less than 60 cents on every dollar claimed. Not because the companies lacked coverage, because the policies contained exclusions that most buyers never noticed, until it was too late. Today, I'm going to walk you through the 6 most dangerous clauses in a standard cyber insurance policy, the ones that insurers use to reduce or deny your claim. And at the end, I'll give you an 8-question checklist to review with your broker before your next renewal. Let's start with the one that cost Merck $1.4 billion. The cyber insurance market has changed dramatically. In 2020, getting coverage was relatively simple. You answered a questionnaire, paid a premium, and assumed you were protected. Then came 2021, Colonial Pipeline, JBS Foods, Kaseya, $6 billion in ransomware payments in a single year. Insurers panicked. In response, they did 2 things. They raised premiums, in some cases by 300% year over year, and they rewrote their policy language. Very carefully. Very specifically. The new policies look similar to the old ones, but buried in the fine print, and I mean that literally, are clauses that didn't exist 3 years ago. Clauses that give the insurer clear grounds to reject your claim if you haven't followed very specific security protocols. Most companies never see these clauses. Their broker doesn't highlight them. Their legal team isn't checking security-specific language, and their IT team never sees the policy at all. Espera. Because this gets worse. The 6 clauses I'm about to show you aren't hidden in obscure policies from small insurers. They're in Chubb. AIG Lloyd's of London, the biggest names in the market. Let's go through them one by one. In 2017, NotPetya hit Merck Pharmaceuticals hard. $1.4 billion in damage. Factory shut down. Distribution paralyzed. Merck filed an insurance claim expecting their $1.75 billion in property and casualty coverage to kick in. Their insurer denied it. The reason? NotPetya was a cyber attack attributed to the Russian government. Therefore, under the Acts of War exclusion, not covered. Merck fought. And in 2023, after years of litigation, they won. But only because the court ruled the exclusion language was too vague. The lesson? Insurers rewrote that language immediately after the ruling. Today, policies contain what's called a hostile state actor exclusion. It doesn't need to be a formal act of war. If the attack is attributed to a state-sponsored group, and attribution is increasingly common, your insurer may argue the exclusion applies. Before your next renewal, ask specifically, how does your policy define a hostile cyber operation? What evidence standard does the insurer use for attribution? This one is now standard. In almost every policy, if your systems were accessed through a pathway that didn't have multi-factor authentication enabled, and the insurer can show that MFA was technically available, your claim can be reduced or denied entirely. Let that sink in. You pay your premium. You get breached. The attacker used a vendor portal that your IT team hadn't enforced MFA on. One system. And your $3 million claim becomes $0. I've seen this happen. more than once. The fix isn't complicated, but it requires a complete audit of every external-facing system, every portal, every VPN, every remote access point. Escríbeme en comentarios si tu equipo ha hecho esta auditoría en los últimos 6 meses. Genuinely curious. Here's where it gets uncomfortable. If a CVE was publicly disclosed, meaning it appears in the National Vulnerability Database, and your systems were breached through that vulnerability, and you hadn't patched it within a reasonable time frame, the insurer can argue negligence. Reasonable time frame is deliberately vague. Some policies say 30 days, some say 90. Most don't specify, which means the insurer defines it at claim time in their favor. The documentation you need: a formal patch management policy with timestamps, proof that you triaged, prioritized, and documented the decision on every critical CVE. Not just proof that you patched, proof that you had a process. Some companies pay ransomware demands without telling their insurer first. I understand why. The attacker sets a deadline. Legal and PR want to contain the news. The CEO wants it resolved quietly. But most cyber policies now require prior authorization before any ransom payment. If you pay without notifying the insurer, even if you notify them immediately after, that's grounds for denial. Worse, paying ransomware without proper process may also violate OFAC sanctions regulations. If the group is on the Treasury's list, that's a criminal issue, not just an insurance issue. The protocol has to be established before the incident, not during it. Who calls the insurer? Who makes the decision? What's the chain of approval? That document needs to exist today. Supply chain attacks are now the primary attack vector for enterprise targets. And here's the problem. If the breach originates from a vendor, their compromised credentials, their misconfigured API, their infected software update, your insurer may classify it differently than a direct attack on your systems. Some policies have explicit third-party breach sublimits, meaning your full coverage applies to direct attacks, but third-party originated incidents have a separate, lower cap. The SolarWinds attack affected 18,000 organizations. The companies that had read their policies carefully knew exactly what was covered. The ones who hadn't found out at the worst possible time. This is the newest one, and the fastest growing. The CFO of Arup transferred $25 million in January 2024 after a video call that appeared to include the CEO and several senior executives. Every person on that call was a deepfake. Some cyber policies now contain an explicit social engineering exclusion unless the company can demonstrate that it had a documented verification protocol in place, a process requiring out-of-band confirmation for wire transfers or sensitive data requests above a certain threshold. No protocol, no coverage. The deepfake technology that was experimental in 2022 is now a commercial service on Telegram. Your employees are facing this weekly. And it looked real is not going to satisfy your insurer. But lo que viene ahora es todavía más importante, because this is the gap that leads directly to our next video. You've just heard the 6 clauses that can destroy a claim. Now here's what you can actually do about it. Before your next renewal, or right now if you're mid-policy, go through these 8 questions with your broker. Not your general insurance broker, your cyber specialist. If they can't answer these, that's information too. 1. How does the policy define acts of war or hostile state actor? What attribution standard applies? 2. Which specific access pathways require MFA under this policy? Is there an exhaustive list? 3. What is the reasonable time frame for patching critical vulnerabilities under this policy's negligence clause? 4. Does the policy require prior authorization before ransom payment? What is the exact process? 5. Are third-party originated breaches covered under the same limit as direct attacks? If not, what is the sublimit? 6. Does the policy have a social engineering exclusion? If yes, what verification protocols satisfy it? 7. What documentation does the insurer require to process a claim within 30 days? 8. Has the policy language changed since my last renewal? What specifically changed? These aren't trick questions. A good broker should answer all of them immediately. A great broker will have already brought these to your attention. If yours hasn't, you now have the script. Download the full checklist in the link below. It includes all 8 questions formatted for a broker conversation, plus a policy annotation template. Let me bring this back to where we started. A UK manufacturer. $2 million claim. Denied. They had coverage. They paid their premiums on time. They reported the incident immediately. And they still walked away with nothing because of language buried in a clause they'd never read. That doesn't have to be you. The cyber insurance market is not your friend. But it can be a powerful safety net if you know how to read what you're signing. The 6 clauses we covered today are the difference between a policy that protects you and one that just gives you a false sense of security. In the next video, I'm going to show you how to build the case for your board to approve the security budget that makes sure you never have to rely on insurance alone. Subscribe so you don't miss it.